Hello and welcome to the week ahead video with me, David Madden. Now before we take a look at the major events of next week, let's just take a quick recap of the major events of the week just gone. Stock markets came under pressure this week, and many stock markets in both the US and in Europe fell to multi-week lows due to a number of factors. First of all, concerns that the Chinese economy might slow down as Shanghai is in lockdown, and second of all, fears that the US Central Bank, the Federal Reserve, might look to ramp up the rate at which it plans to hike its interest rates. And with that, we saw a fairly large sell-off in stock markets around the world. We also saw a fairly sharp rally in the US dollar. Since then, we have seen a bit of a turnaround. Stock markets are moving higher, and we've seen a move to the downside in the US dollar. Now, looking ahead to next week, we have a couple of very important announcements from the US. On Wednesday, we have the all-important Federal Reserve meeting, so we find out what the US Central Bank is going to do in relation to interest rates. And on Friday, we have the closely watched US non-farm payrolls report, which should give us an indication of how strong the US economy, how strong the US labor market is. Now, looking at the Federal Reserve meeting on Wednesday, about just over a week ago, Jerome Powell, the head of the Federal Reserve, gave quite a hawkish update and made it quite clear that if the Fed are seriously considering hiking interest rates by 50 basis points, half of 1% next week. That's been a major factor in influencer in the financial markets for the last couple of sessions, and it's also going to be what's going to be in focus, regardless of kind of what size interest rate hike do we see next week. What sort of language do we have from the Federal Reserve? Is it a case of should we see an interest rate hike of 50 basis points and dovish language to accompany it, or should it be potentially a 50 basis points interest rate hike and actually quite hawkish language to suggest more large rate hikes are going to be in the mix? Or who knows, the Federal Reserve might actually look to roll back on their previously hawkish commentary and actually have potentially either a 25 basis point hike or the less likely outcome of no hike whatsoever. Now, looking here at the US500, we can see the price action recently. It's been very volatile. It fell to a multi-week low earlier this week. Since then, it's been moving a little higher. But that being said, the US500 continues to hold below these two simple moving averages. While it continues to hold below these metrics, it's likely the more medium-term bearish trend will continue. Moving lower from here, we could look to retest 41.87, and a move below that could see its target 41.42. If on the other hand the more short-term medium uptrend does continue, we could look to target this region here at 43.97, and a break above that could see a target 44.31. So on Wednesday we have the US non-farm. On Wednesday we have the Federal Reserve announcement, and on Friday we have the closely watched US non-farm payrolls report. To an extent, the US non-farm payrolls report will be overshadowed by the Federal Reserve. But if the Federal Reserve, depending on what they say in terms of their language and their outlook beyond next week's meeting, that the US non-farm payrolls report could influence what goes on in both the likes of the US500 and also the US dollar. Looking here at GBPUSD, we can see it's been in a strong downward trend. That's largely been down to a strong US dollar. The US dollar has hit a hit a 5-year high against the euro, and it's been high against other currencies. What we can see here is that it's been an aggressive move lower in GBPUSD. Partially also because of the cost of living crisis in the UK. There's constant headlines about that. There's high levels of inflation in the UK at levels not last seen 30 years ago. So this has all been kind of weighing in on the currency pair, which recently fell to its lowest level since June, July 2020. So that really highlights how bearish the recent move has been. It's also worth noting on Thursday next week we have the interest rate decision from the Bank of England. Now the Bank of England have hiked interest rates 3 times since December last year, so the traders aren't really expecting another hike in the near term from the Bank of England. But the commentary and the language they use, especially in light of high levels of inflation and constant headlines about a cost of living crisis, is going to be very much in focus. We have bounced back a small bit on GBPUSD, but it's worth noting we're still a long way below these two simple moving averages. In fact, we're below all 3 moving averages, and while we continue to hold below all 3 moving averages, it's likely the broader bearish trend will continue. Moving lower from here, we could look to retest one spot 24.10, and a break below that could see us down towards one spot 23.00. In the short term, we have seen a bit of a rebound. Market's moving higher, the RSI is moving higher, indicating the price bias is to the upside. Momentum is now in positive territory. If you do see a continuation of this upward move, resistance could be encountered at one spot 27.71, and a break above that could see a target at one spot 28.686. Just to recap, on Wednesday we have the Federal Reserve meeting, on Friday we have the non-farm payrolls report, and on Thursday we have the interest rate decision from the Bank of England. That's all from this video. Thank you very much.
Thank you.